What is going on, ladies and gentlemen, apes and apettes? AMC stock is holding incredible strength today, and you guys might be thinking I am crazy down below in the comment section. Before you say anything, let me provide you guys my reasoning. So AMC stock down about 3.2%. Take for an example something else that I own, like a Square, right? They own Cash App. They own obviously the Square terminals where you can cash out at different businesses. That is an arguably better stock to buy at these prices for a fundamental reason. Obviously, we're not talking about fundamentals here with AMC stock. We're trying to make the comparison between the two companies, but they are relatively the same in a lot of aspects. Like, they both have a lot of debt. They're both higher growing companies, right? And they should both strive over the next coming years. But why is AMC stock doing much better than a stock like Square or something like Fubo TV down 5% or Lucid down another 5.5%? And I could keep going on and on. DraftKings down about 6% today, right? It's a very weak day in the markets. AMC stock is holding up very well. Long story short, in part, why I think that is actually happening is because people seen what happened last time with AMC stock, where the stock went from 13 to 35, and I don't think people really took advantage of buying the dip back then. So I kind of think that that's what they are doing here now. But on top of that, we have a very important catalyst that we must go over for this week, which is going to be young Jerome Powell. He is the guy that can drop the markets or pop the markets percentages at a time with a single word. He speaks on Thursday, and the markets are going to be paying very close attention to exactly what he says, because the Fed has been very transparent with us before they make any drastic changes to their policy. And if they're going to do that 0.5% rate hike, Fed Jerome Powell is really going to hammer that home here this week, because we only have about 2 weeks left until the next Fed decision, which is going to be May 4th, and that's going to be one of the next big catalysts. But besides that, we do have earnings as well. We got a lot to talk about here in this video, so I don't want to waste any of your time. But before we get into it, do you guys have your success nutrition facts? It's a fact that you need hustle, motivation, belief, discipline, focus, flexibility, failure, risk, persistence, and patience to be successful, especially in this trade, but in life overall. So good to point out there. Let's dive into this video. So first things first, let's dive into the catalyst for this week. And I do want to point out that Fed Jerome Powell speaks on Thursday. If you head down to good old Thursday of this week, you will see that he actually does come out at about 11 in the morning, 11 a.m. in the morning. That's a high volatility expected catalyst, and that's going to be very important, because right now the Fed is kind of hinted at doing 0.5% rate hikes, but they have not confirmed if they're going to do that. And that's exactly what they like to do. We knew for a month or two that here during the last meeting that we got, they were going to raise rates by 0.25%. We have not got that kind of confirmation just yet. So if Fed Jerome Powell comes out and doesn't say anything about a 0.5% rate hike, or says that they're really not thinking about doing that this upcoming meeting, May 4th, which, keep in mind, is 2 weeks, 2 days, 14 hours, and 23 minutes away, then the markets are going to absolutely tear off of that. Now, that's not as good for the long-term thesis of the MOAS, which we will talk about later on, but it could definitely give us momentum to see a decent size rally here in the short-term future. So that's going to be a big catalyst. On top of that, you do have earnings for this week of Netflix, IBM on Tuesday in after hours, after markets do close, and then the day after that, good old 420, you have Tesla in after hours, and then on Thursday, you do have Snapchat. So these are going to be the main really earnings trades for this week. You do have oil companies that report, and you do have banks as well that do report on Monday. A lot of those oil companies are actually on Friday. So we in the trading group have been looking to trade Netflix, Tesla, and Snapchat to make some contracts free. Now, Tesla did rally throughout a good portion of the day so far, and they are still actually positive. So we were able to make about $200, about 2 contracts of Tesla earnings trades free for this Friday for $1,200 strikes. So I don't know if those will hit, but that's a really good strategy, is going in large on these positions, playing the directional move, and then making your money in a day, getting in, getting out, keeping some contracts for free instead of YOLOing your money on which direction or the other that you think earnings will go. Just play the direction, get those free contracts if you are a degenerate gambler and you do like to play options, and especially around earnings like we do. So if you guys want to come join that, link down below in the pinned comment. But nonetheless, earnings are going to be important. You're really going to get a feel of how the consumer is doing overall. Are they still getting Netflix? Are they still spending money? Is there any cancellations? What's the deal with that? You're going to kind of see with Tesla, how is the consumer feeling about electric vehicles, especially during a time where gas is through the roof. It's like 4 or 5 times cheaper to drive an electric vehicle right now than to drive a gas vehicle. So that's going to be very, very important for Tesla. And then Snapchat, you get a feel for advertising. And I do think these earnings will likely be bullish. Now, I'm not so bullish on something like Netflix, especially heading into summer. Now, I do use the product on a daily basis, and I do like Netflix. But, you know, it's hard to see the company growing more and more, you know, on a strong growth rate comparatively to being locked down at home for 2 years. I think that's going to be pretty hard to comp those numbers for the last 2 years during this year. But nonetheless, Netflix has come down a lot, and you've really seen a lot of negative earnings revisions from analysts. So it will not take much to actually pop Netflix. So that's kind of the direction I'm starting to lean, is maybe Netflix could have a positive report just because everything has been so bad. Usually when things seem super bad, especially you can relate this to AMC, everything seems super bad. The stock hits $13 per share. People saying it's going to 10. That's usually the time to turn bullish on the stock, because what happened? You ran up over 200%. And that's a lot of what this is reminding me of right now. Everybody's bearish, so you are seeing some people stepping in and actually buying the stock. So on the note of AMC, it's looking pretty damn good today, but Fed Jerome Powell, as well as these earnings, will affect AMC, because AMC is a part of the broad markets. It doesn't trade on its own exchange somewhere out there. It's a part of the overall market, so it will be affected by the overall sentiment, just like a lot of these other stocks are. If you take a look at my portfolio, right, Lucid down 4.5%, PayPal down 2.3%, Mullen down 15%, SoFi down almost 3%, Fubo down almost 6%, Square down 3.5%, DraftKings down 5%, right? So it's affected by the markets just like these other stocks. Snapchat, look, 3.4% down. It's going to be affected by the market, so that's why it's very important. Now, as far as the Fed rate monitor tool, the markets are widely expecting to get that 0.5% rate hike. So that's why I say if Fed Jerome Powell comes out on Thursday and he's not as bearish on the markets, or specifically doesn't say anything about that 0.5% rate hike, the markets will likely rally off of that. The percentage probability of that 0.5% rate hike coming May 4th will dramatically go down, and that should give us room to bounce to the upside, and it should give AMC room as well to make that bounce. Now, as far as the Ortex data, let's go ahead and give this page a quick refresher, and we can see short interest of free float 19.56%, current shares that are sold short of 100.8 million, cost of our max of 2.73%, utilization of 100%. So not too much has actually changed here, staying pretty flat as far as the shorting activity is concerned. Now, you are seeing a lot of calls coming through for the day. A matter of fact, you are seeing some very large orders, like this January 20th, 2023 145 call. Look at that. That's a $400,000 trade somebody is betting on here in the next 9 months that AMC stock is going to see a much larger move to the upside, and that might not be a bad trade to actually copy, given the amount of IV that we have seen, and given the amount of carnage that we have also seen in the share price of the stock. But a lot of other large orders as well. 2 of these September 16th $26 calls coming in at 138,000 for one order, 190,000 for the other. And then you do have another July 15th 145 call, and that was about a $58,000 order. These are institutional investors. These are not your Joe Schmo little retail guys. These are large players in the markets. And take a look at this, a May 20th $35 call for about $30,000. So hedge funds are definitely betting the stock is going to go much higher. Look at the positive order value of 89% for the day, 16 orders totaling 72.39 million. This is almost the equivalent of the total dollar amount that we seen for last week in options coming through just for today, 72.39 million on the day. Last week, you've seen $124 million worth heading into AMC options, and the positive order value of last week was about 71%. So it's looking very good, a very good start to the week here for AMC stock, and the options definitely look interesting here when you are trading at about $17 per share. It looks like somebody might know something that we don't, but I don't want to get too ahead of myself as far as that is concerned. But it's definitely a very great sign. As far as the max Payne for AMC stock, we got to go ahead and pull that up, which we will do right now. The max Payne is looking at about $19 per share by the end of this week. That would be a move to the upside, and that would definitely be welcomed here and now, and I think that's likely what we will see. Like my video yesterday, my really bullish price target range is in between about $22 per share, $21 per share, and about $26 per share, really breaking over some of those key moving averages. And we actually want to take a look at the chart, and you could see we have to break out above the 50-day moving average, and maybe these hedge funds are betting that we will break out above the 50-day, and then we will catch a bid back up to $21 or $25 per share. That is very, very possible, and that looks pretty probable to say the least, given if we do see positive earnings and then a bullish Fed Jerome Powell. He doesn't speak about a 0.5% rate hike. You're definitely heading back up here in the short term. Now, we know over the long run trajectory of the short squeeze, we need to restrict liquidity that hedge funds and institutions have to cover on those short positions, and that is exactly what has been happening in the bond market. If you take a look at bonds for the day, the yields are still going up, so the bond prices are still falling. So bond investors have been getting whacked, and this chart overall, the 10-year treasury chart, looks like a momentum stock, to say the least, and that is definitely not normal. Investors are getting killed here in the bond market, but as the stock market does continue to go down, that is a bullish thing for the overall state of the MOAS. That's exactly what you need to see to restrict that liquidity and make it so hedge funds don't have enough money to service those margin calls, thus turning a margin call into a forced share liquidation. So that's pretty much all I have for this video. That is the main catalyst. That's really what hedge funds and institutions are doing with the option flow. It's looking pretty damn bullish. The last time we seen $300,000 in single orders going through for AMC stock, the stock did go from $13 to $35 per share. So who knows exactly what will happen this time around, but I think it's looking pretty damn good. Thank you guys for tuning in. Hit the like button, subscribe to the channel if you guys want to come join the trading group. Link down below in the pinned comment. We would love to have you no matter what your skill level is. If you are new to trading options, penny stocks, momentum trades, swing trades, day trades, spreads, all of that good stuff, earnings trades, those are typically the best trade, so this is probably the best time to get involved with that if you guys have not already. Link down below in the pinned comment. We would love to have you come join us on the live stream later on tonight, 10 p.m. to 11 p.m. Eastern Standard Time. If you want to ask questions about the trading group, if you want to ask questions about strategies or different earnings trades, how to trade them, how I am looking to trade them, that is your way to do that. So all in all, thank you guys for watching, and I will see you in the next one.